Daily trading recap. Let's get after it today on this Wednesday, the 23rd of March, 2022. To Christ be the glory, as always. Market internal dollar volume on the day as of an hour, 28 minutes after the close here. NASDAQ, $205 billion volume. NYSE, $265 billion volume. OTC's $1.9 billion volume on the day. Not a lot of tickers popping up on the moving scanner this morning, and not really a lot showing up. Crazily piquing my interest after the close here. So taking that for what it's worth, just as a reference point for me. Other introductory measures saved myself quite the account destroyer today on this full session type of trade that I'm looking at on the ES based on the backtested data. And this would be this would ruin my account for the account size that I have now, but certainly wouldn't ruin the strategy. It is factored into how the trade will work out and the hit rate for the days that do produce the parameters that I'm looking for. But as it opened on yesterday, let's actually look at this on the ES perspective. As we opened at 1800 yesterday, 6 o'clock, that would be Tuesday yesterday. Getting in, I'm still dialing in and figuring out how and when to best put the interval for which the entry fills immediately after the open, because going in right away can sometimes get worse fills than waiting 2-3 seconds after. So still dialing that in a little bit and then looking for what the data has been telling me of 10 points, looking forward to the upside there to capture there. And it would have come within 3, but we barely tapped 214. I think it was 215 or 4515 that I was looking for a fill there. So as we were just getting double toppy here and even this triple top, I think I put my stop back at break even, which was totally against everything that this strategy is. This strategy is a strategy. It's made to be totally automated, not involve me or my emotion whatsoever. But for some reason, I just got caught up in it because we are in this 6th green day of SPY in the overall market for where we're bouncing, and just carrying that emotion of, gosh, for how the small my account size is now, for how I've ruined myself in the past of trying to do this, of having this strategy kind of dialed in, but still ended up taking these stupid losses. Unfortunately, just unluckily, whenever I start the strategy, it's just I ended up cutting it or just setting that stop even break when it was just failing to get any higher there, and save myself from quite the headache downstream today. So to catch myself trying to do that again, I think just the parameters were lining up so key for me to say I was willing to do that, and for how it moved pretty soon after my entry of yesterday, but of today's session, that it just set up kind of coincidentally that way for me to work it that way. So I don't want to be doing that really ever. That's the reason why I'm pushing automated trading so much more, is to take my emotion out of it, take me out of the equation as much as possible. But I mean, in hindsight, glad I did not take that loser today and just made out with an easy little scalp there. 930 strategy did work today as compared to yesterday, when I think for some reason, because I was still holding one MES short, that it just didn't want to send out those orders on my other strategy. I don't know why that was factored in. I didn't see anything that was triggering that otherwise, but being ready today if that order wasn't going to go through, to make sure that orders were sent, and I pushed that button. Glad the margins came back down. They were double, but now I think yesterday or 2 days ago they got dropped back to their normal rates through NinjaTrader here. But I was ready on that trigger right at 930 mark to be pushing the button, and I actually did push the button because I didn't think the order was getting filled in that time frame that I wanted immediately sent within the second of market open. But then sure enough, as I'm pushing that button, thinking that it wasn't going again, sure enough, I hear the order going off. That strategy did end up going, so I was taking double the original size that I wanted to, and then quickly I'm trying to cancel out that first order, just I take whatever it was to kind of made a mistake, correct it, or it was just kind of a weird situation. But luckily enough, I think I pulled a point or something off of the mistake ones that I did push, so still worked out well for the original strategy that I had, and I think that's going to continue to be a good strategy going forward. It's held up in the last 50 days of backtested data, and 100 days as well, has looked very, very profitable, just as an overall long-term strategy, not trying to force more out of it or just collect it as a daily ritual, but still keeping that time perspective in mind, as I have to do with this session backtesting type of trade that I'm doing, as well as it's not about the individual day, it is about the trading number of trades over time that makes the actual trade in effect. So keeping that in mind relative, and not getting so caught up in, this one has to make this money today, or just banking on that as a sure thing, because nothing is ever a sure thing, obviously. So that was a good little introduction there to craziness haywire. But also looking at in pre-market, carrying in that bias, and I'll allude to that a little bit next with my other point for this introduction, but carrying in this bias of, okay, we could be a good day to go short. Having a red day today would be a little bit more likely as we pushed more consecutive green days in a row. Obviously, this isn't a 50-50 game of whether it is a red day or green day. Sometimes it feels like that, but with this finicky, fickle mistress of the S&P 500, obviously, if we're pushing consecutive green days and again and again and again and again in a row, it's going to be a little bit more likely whether one of the next days we do have a little bit of a sell. Just come a little bit down. It doesn't have to be Titanic fall off the cliff, but just a little bit something. So carrying in that mindset today, and as we're pulling back a little bit in pre-markets, I'll pull this up on ES again, just as we're looking at identifying this 4485 level, just for some reason as it was bouncing off there and then consolidating just a little bit again. I was thinking, gosh, if we continue to break here, I was still thinking about getting short one MES contract. That's the size I like to take. That offers me a beautiful risk reward if I can find the ideal setups of the type of size that I'm risking in regards to points, but also upside if it goes in my favor on a full trend day of the type of trade that I'm looking for on that. So then identifying, okay, 445, and then thinking through the pre-market, man, if it breaks there, I think it could go, and then kind of just running that scenario over and over in my head again, but then realizing, what am I risking? Am I going to risk this very arbitrary, 5 points away here at this range? And why am I identifying that as a area of, okay, that's where my risk would go if price started to go away from there? It's a very weird trade and almost a little bit chasey. So glad, patted myself on the back of just understanding where I would normally be. Okay, I think I see something here. And then just following along with immediately doing that and not really having a care in the wind for what that risk reward would be, especially on the future side. But then coming into today, say, this thing trades every single day and there's always going to be opportunity and it doesn't have to be forced today. So letting it go, do what it wants to do. And sure enough, it did come back and would have maybe stopped me out for whatever risk I would have set on there that way. These stupid cats trying to get out of here. So then I also did take during market hours, then stepping into, okay, still carrying that bias of the red day. Let's play for maybe a full intraday move based off of one MES contract, establishing a position off of a decent risk reward setup, or potentially shorting into tops if we see any during the initial 15 to 30 minutes of market open. Starting in as we're just continuing to break low, I just pat myself on the back for not chasing as it was breaking some new lows, but that's exactly what this little trade was. And sure enough, it did have more downside and selling off harder from there. And stupidly covering in another arbitrary level, I said, of as it broke here, my initial risk was somewhere 4480 or somewhere around here, maybe this top that it was. And then as it broke hard to new low of day, then I slipped it down to whatever this range was, 4473. Very, very arbitrary, all the same. Sure enough, it started rolling over. I think VWAP was here actually on SPY itself. So that's where it popped to, tested, reclaimed, started falling off from there. So got back in short again based off of one MES contract, figuring that it was a break-even trade, and I got stopped out stupidly. And the basis for that initial trade was very stupid to begin with. But hey, this is an obvious area. I can see here this is a VWAP rejection type of trade. Price starts to work immediately from the get-go, but double bottoms beautifully. And that was the thing that I wrote down in my introduction that Chris even mentioned to you that I didn't realize until he said it, of I completely missed a very, very beautiful double bottom entry that, even not getting filled in this little doji candle here on ES, but seeing it in the SPY chart of, I was just so biased and focused on, okay, we're going to break here, we're going to break to new lows, we're going to break to new lows, it's testing here, okay, it's still holding, but we're going to break to new lows, and completely missing the objective viewpoint to say, wow, I bet there's a lot of other people also short in this one, thinking that we've had a lot of green days in a row. We could see some little more downside here, but we're failing to do so. Price can now start to pick up against me and go in reverse. That was just something that completely spaced me, and I'm glad that Chris texted that because that was just a reminder of it's good to identify these types of trades or probabilities or understandings of what I'm seeing on the chart, but at the end of the day, it is the pen example. Whatever anybody and everybody I can show a ballpoint pen to, you can say that's a ballpoint pen, it's meant for writing, but you show it to a dog and the dog would say it's a chew toy. All perspectives matter when it comes to charting, and I can't just limit myself to my own perspective. I have to be aware and understanding of how other sides are looking at the chart and what potential factors could be in play for the price action on the day. And that's gets quite impossible at times when figuring in on the S&P 500 on such a broad market ticker, on an index ticker especially for this one. But that's the game we're playing as of right now there, just for the small size for that little MES trade. And it's, I want to say it's harmless, but it is kind of harmless. If I can continue to just keep myself. I still got like I do get free commissions for this month, at least for whatever setup that I bought through Ninja Trader. So just banking in on that as long as I can and just continuing to test myself and find potential decent risk reward setups that may offer a little bit of something, or on those trend days that do hit, that they become awesome, fantastic winners that make up for the incredibly little, small, minute paper cuts over and over again that I take here. Like, so in loss of $20 in total today that I took on those 2 in and out trades on the MES tickers. But looking for like if we get a 100-point move, a 60, 70-point move to the downside, to the upside on one day, that over and above encompasses all of those losses and ticks that I would suck on just training myself, educating myself, being in the arena for those little trades like that. Memers are coming around again a little bit. AMC, GME, I saw KOSS a little bit. Not doing anything crazy today. I'll just reference them quickly. AMC, just to pull up the charts quick, moving pretty nicely in after hours from yesterday, and proving a decent little price action, looking like 13% in the green on AMC, 14% on GME, KOSS, 3.9% there. So we'll see if they have any more run or steam left to pick up to bring in more attention and light up the small cap fireworks. Keeping our eyes on them that way. And I did also want to mention, I wrote in my journal here, I did step away a little bit from, after I was not messing around, but found myself in that little hole or just situation of double the initial contract size I want to take on that 9:30 candle open. I stepped away for a few minutes, was talking to family and doing stuff, stepping away from the screen, so did distract myself a little bit, which I very quickly found out as I tried to return back to the screen, and then tried to go ahead and play on all the tickers that thought I did decent preparation on and have been around with to feel some of their characteristics in the past few weeks. It was much a different reality, even that few little minutes that I was just away from the screens. And this whole thing requires more focus than just being lackadaisical and kind of going with the wind and just doing whatever. This needs more dedication and focus and discipline to be able to step away and say no. Tough at times to be doing that, but of getting that lesson today a little bit more so. So mentioning that as well in the introduction. And that's really all I had for that. Let's go into MULN. Lots of little individual trades here. Biggest size I think I took was 30 shares. Not big size whatsoever. On both MLUN and NRSN, I lost $5 on each one in total on the tickers on the day, so nothing crazy whatsoever. MULN looking for the reversal. I think I did actually also go short paper and then forgot about it, so that was a little bit of a big mistake on my part, but that was through the trading view, so yeah, of course, paper, not real. But can't be forgetting about these in the future, so good reminder lesson on that one. Starting in long, as I thought we were holding after this initial morning spike rejection, but still putting in higher lows under VWAP, looking for type of consolidation, any amount of level claim there. Again, as it's pulling off, but still holding this level, getting in, sizing in with more shares there. I want to say 30 shares. I think it was maybe 50, max of a 100 share position size. And as it was breaking to new lows, cutting the trade at that point. But sure enough, did reclaim, pushed up to VWAP once again. And this is where it just got a little bit, I fell into the 10 share dilemma of, okay, well, this is a bad entry spot, but I just want to protect myself for the little bit of FOMO or just maybe craziness that could happen on a sticker, for how low float it is, for the short sale restriction on it today, for the potential that I just don't want to miss it. So those little FOMO protector trades that get me the stupid entries here that ends up topping there and then has me selling off here at this candle, and then thinking, okay, well, it's still consolidating. It could have a new perk here, getting in with another 10 shares. Sure enough, it does, and then holding it even longer for a little bit more risk and taking slippage down here at this point, again, of a little in and out. And then it breaks a view out, but reclaims, holds above, consolidates nicely, little upward wedge, if you want to call it that. I get in again with another 10 shares, spikes a new high of day again. This time I'm away from the screen and just setting even further away risk parameters because it's 10 shares. It's just, I'm not thinking it at the time, but it is that little FOMO protector that, gosh, I think this thing could go crazy. Maybe we touch $4 today. I could certainly seem to do it very easily if certain things lined up. Like if it touched $4, it would have touched $4. But these are the types of trades that end up killing me and don't produce any productivity in me or growth as a trader. And they're not entries and exits are not positions at which I would want to be taking big size trades. They're certainly not trades that I would be proud of to say, oh, this is that awesome little entry, or I was identifying this key point on the time and sales level 2 that made me do this, and then these parameters lining up on the technical resistance side, blah, blah, blah. Really none of that. It's just kind of a blanket, the same thing that I lead into a little bit with the futures trading of just kind of picking, oh, I think there's a little bit, I know what I'm risking, so then I can go ahead and go forward. And I trick my mind a little bit there to say that, oh, because I do know what the parameters could potentially be, that it's going to be a good trade, versus the reality of, do I really need to be in the trade? And as I come to myself more and more now too, as I get further into this trading career, of how much longer am I going to be taking these incredibly small position sizes? I mean, I was telling myself, and to an extent it still is, this learning experience and educational experiments for what I do with, okay, what type of trader am I? Of even just in general, of messing around with futures or options or equities, but in the same thing of, okay, now we're focusing on equities especially. Okay, now what type of trades? Of breakout trades, of dip and rip trades, or blah, 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 of all those different patterns of trying to fool around that way. But at the end of the day, I mean, it requires more than just continuing to do the same thing over and over again and take these little stupid losses. I'm not winning anything here with these types of trades here. I mean, it wasn't the most awesome, beautiful opportunity on this chart today, but there was certainly opportunity. And I need to be a more refined knife edge than just the sloppy, oh, because I'm just only taking 10 shares and because it's educational, experimental, I can do it this way. It's getting stupid. And I think that's bleeding a little bit too much into my own mentality of trading than I really want to. So I think it is time to start refining that and almost force myself to say, I'm not going to take this trade unless I'm taking 1,000 shares minimum. And carrying that mentality, because that certainly carries more weight and forces me to be more involved in what the actual entry price is, what region I'm actually looking for, and identifying the trade parameters that way. Which pros and cons to both sides of that, of being free and easy, being like the kids on the street in Brazil of playing soccer, of just how loose and how much fun they are actually having, versus being uptight and strict and like heart palpitating at every single tick of this monitor. But on both sides of it, I think I do have to force myself just for my own growth going forward. And yeah, I come to, just as each day goes by, trying to do the same thing over and over again is insanity, and expecting a different result. Definition of insanity. So yeah, that was MULN there, NRSN now, have to mention. Of course, third day play, looking for a third day surge. A little bit of perky here from the opening of pre, and just, again, that little bit of FOMO carrying the bias that, man, if this thing starts to light, it could just go firework mode instantaneously. Opens a little bit of a distance away from VWAP, perks there out of the first few minutes out of the gate. I start sizing in with, again, not a relatively crazy position size. I want to say less than $500 for sure. And I didn't even throw any of the share sizes on here because it's just too stupid of trades and too stupid of sizing for me to even clarify these as recognizable types of entries and exit points, or something that I want to improve off of in the future. Because for me, that's just the entire piece of the project that I want to throw up and just put into the wastebasket, versus learning and saying, okay, well, I maybe could have sized up more on this position entry price. Like, you get what I mean, of taking the whole thing and just go ahead and dunking it, learning from my mistakes that way, versus trying to fine-tune something individual with these. But I could say, too, wholeheartedly that NRSN was a little bit better of a hold than MLUN. But like I alluded to a little bit with MLUN, for how I stepped away from the screens for a few little minutes there, trying to just come back and think that I was totally with it and ready for it. Just not ideal, and not what's going to make me a good trader. But for the specific breakdown on this one, for how I took it, thought we were clean to VWAP pretty nicely, starting in with a few shares. Then we broke to new high, looking like we were breaking to new high there, sizing it again. Huge volume comes in, rejects it, starts to slam it down to new little relative low. I get out, say, hey, I don't want to mess with that. You certainly got me there, tricked me. Add that, chalk it to here again, of even stepping away for the little few minutes that I was away, and then trying to completely disassociate, wipe my memory, then come back and realign and remember what it was actually happening. Hard process, and can't really be done for me, especially when this first few minutes of market open, when it is the craziest opportunity time in the morning session. So getting out with that first trade, and then, okay, it didn't actually break hard to the downside. We're now back at VWAP, sizing anyway again with 10 shares, I think it was, on this little second trade, 649, whatever that entry was, right at VWAP. Price starts to hold well immediately from there, continues to hold prices that I want to see off of VWAP, testing to new highs. Sell a little bit into, as it was hovering around 7.2, but sure enough, it did break higher to the upside there, gets above 7.4, taps above 7.6 a little bit. Sells off immediately from there. I still left that remaining 5 shares on because it was 5 shares and because I was saying I would be looking for far more movement if I was actually in this trade. I mean, we're not even at the previous highs of $8. I mean, I want to see this thing at $10 by the end of the day, right? That's the type of short sale restricted third day surge, low floater craziness that I want to see. And that's for what it showed in that first day. Man, to be expecting anything less than that would be against the grain, in my opinion. But price always wins, of course, and that was all she wrote for the upside volatility there. Rejected off of that, tried to tap above VWAP, but rejected even further there. And sure enough, started selling off the rest of the day. Hard panic here around 11:38 and just closing blah. So not certainly dead yet. Maybe we do consolidate for a few more days and potentially produce something crazy within a few, maybe even a week or a few trading days, but we'll keep our eye on it for sure, of course, but just not in the works for how I was trading it, for the size I was taking, and just the focus that I had was certainly not A+ in my books there today on that one. And like I mentioned, nothing hard on the scanners again in the morning or really even after the close here that I'm looking at. Just continue to put in that work, review these trades, and get away from those bad habits, completely try to eradicate them, and then look at the habits at which are creating a better and great trader in us and start to fine-tune those more and foster them more within us and put the focus on those, and look to add different elements begin to test those different elements versus the trying to convince myself that, oh, I'm fine-tuning this little strategy of, the stupidity that I was doing with the MES of trying to, in pre-market that I didn't do, that I refrained myself from doing, of, getting short as it's still breaking to new lows, and not an optimal risk-reward situation of those trades like that come to mind of, it's not about fine-tuning those strategies. It's almost like, let's just put that aside because it doesn't work, and let's look at something else and then see if that even works. And if there's just a little hint of flavor and life to it, then we can begin to fine-tune and dial in and adjust and play around a little bit more in that space when it has shown its validity in the first place, versus other stupid factors that I still try to convince myself from that hot 2020 market that I think I fell into a little bit too hard in my early trading naivety, that just formed a few bad habits that, we're slowly preening that out as much as we can, but building and growing upon the better habits that will show themselves through time. So that is all I had. I sincerely thank you guys for watching. We will catch you guys on the next one.